couple days ago, the Federal Reserve came out and cut interest rates, the short-term interest rates. And, every time we get a Fed rate cut, there's this confusion about what's happening with mortgage rates. So I want to kind of dispel this myth a little bit, because what we saw this week is when the Fed cut rates, mortgage rates actually went up because the mortgage market had already priced in the Fed rate cut. There was a hope or a belief that maybe the one guy on the board of governors, there was some small chance that he would convince other people to do a 50 basis point cut and then mortgage rates would drop more. But they didn't, because the market, as I said in the first segment, moves ahead of the data or the news or the policy because it predicted it. So you didn't see mortgage rates drop. And, realistically, the Fed came out with Chairman Powell had a speech afterwards, and he talked about how it is not a foregone conclusion, far from it, he actually said, of the interest rates being cut again this year. The chance of another Fed rate cut got reduced. Now, I still think it happens, and they're kind of flying blind right now with the government shutdown and the lack of data. And the probability on all of the, the prediction markets are all still saying 60, 70% that they cut rates again. But it's not a lock, okay? So that being said, as we get closer to that date, I think we'll see a little bit more softening of interest rates. But I want everyone to understand, if you're waiting for 3% interest rates again, you're never going to see them. You're going to wait forever. And if they ever do show up, you'll be too late. You'll miss it because everyone will have moved in anticipation of that. And I believe the bigger story, as in terms of the positive impact on our market, is the property tax reform that's being discussed, and of course another year without a hurricane. So if you're going to wait for interest rates to get to that number, you might as well just wait forever, or find the DeLorean and go back in time, because you're not seeing 3% interest rates again. It's just not going to happen. We're not far off from the lowest point we're going to get to. We're kind of in that mid-level. Historically, the rates that we have right now are pretty good. They're average. When rates are really, really low, it's because there's some sort of phenomenon that they have to move that low in order to overcome something. If we have rates that low, there's going to be a lot of other economic problems, in terms of where we're at today. I do think we'll see some more cuts next year if President Trump gets his Fed chair pick and, he's able to kind of guide things the right way. By no means do I think we're going to see massive cuts based on the economy and the data that's coming out. So if you're waiting for those rates to drop and you wait too long and then the news comes out or the vote comes out about property tax relief, that will move the market greater than interest rates. So the Fed cut is the short-term, rate, not the long-term rate that mortgage are. Now, there is some correlation, but nonetheless, there are other factors. Some of the quantitative changes that are being announced will have some impact. And then it's just a matter of what margin banks are willing to operate at to be able to get rates low. Could we see the high fours again next year? Maybe. But we're probably not far off from, being, kind of at the low point without causing other problems or other problems in the economic system, rearing their ugly head. So as a home buyer, now is the time. I mentioned this before, great opportunity to buy right now. But I want to speak to people right now that are in a mortgage with a rate above 7. If you have a rate above 7 and you have an FHA or a VA mortgage, there's a product called a streamline refinance. And this is perfect timing for the holidays. A lot of people struggle through the holidays. There have been layoffs. There's economic problems that people are struggling with. And you could do a streamline refinance that lowers your interest rate and potentially, depending on the timing, allows you to skip a payment. If your rate's above 7, it may make sense for you to do this, and you would lower your payment and give yourself some economic relief. So if you're someone who has that rate and you're in a VA or an FHA, you can do that streamline. Now, the streamline refinance does not require you to qualify from an income perspective. It doesn't require your property to appraise. It is streamlined. It is simply lowering your rate for the most part. It is a very easy process. Go to citywidetampa.com. Melissa or Oscar or Morgan will reach out to you and help you through this process. Again, it's citywidetampa.com. Definitely an opportunity for people to lower their payments, to stabilize themselves financially, and it's a good time to do it with the end of the year approaching. And so I talked before about how we've had these Fed rate cuts, and we've seen interest rates at their lowest point in probably 18 months. And I think we're going to see it drop a little bit more. Statistics are saying the Fed rate cut in December is a probability in the 60 to 70% range. As it gets closer to that, maybe the government opens again, there's more data that comes out. I think there's a reasonable chance that that percentage goes up. And as it gets closer to that date, we'll see mortgage rates slide down again. So I think there's a really good chance of some more relief if you time it right. If you go to Citywide, again, citywidetampa.com is our preferred mortgage company. Talk to them. They'll run the statistics. They'll verify the type of loan that you have, and then they'll see, are you able to very easily, without qualifying, without your income, without appraisal, not your credit. They're already on the hook for you for the money. You know, the government-backed mortgages with FHA and VA will literally lower your rate through a streamlined refinance. It's a great product, and one that I think this time of year and with the economy and the situation that we're in is one that you should take a look at. Not a lot of people know about it. Oftentimes we get people that make the mistake of doing more of a traditional refinance out of a VA or FHA loan and incur, hoops and costs and different things. So again, citywidetampa.com, it could save you a payment, and it could save you a lot of money this year, and definitely something I recommend. So